Hey guys, Stock Saturday, and for once I am outperforming the S&P and the Nasdaq. It's been a pretty good week, up £11,000. So Nasdaq is up about 3.4% from the looks of it, and S&P a little bit less, and I'm up 6.8%. This has largely been due to Cleanspark and the gold and silver miners, amongst sort of a few other bits and pieces. But yeah, let's sort of have a look at a few other bits. No earnings again just yet. So yeah, a few other bits that I sort of thought I would highlight. So I've been mentioning a few times about my sort of Volkswagen Porsche position. I hold Porsche SE, which is essentially a proxy for Volkswagen stock. And yeah, it's sort of been lagging behind, certainly lagging behind my other much larger position in Stellantis. And I've just sort of been favouring Stellantis an awful lot more recently. They don't have the debt issues that Volkswagen have. They have some debt, but they have an awful lot more in cash. So that's pretty good. They actually get a little bit of, if you come down to their interest income, they're actually getting quite a bit in interest income compared to interest expense now, and this should only be sort of improving. Obviously, the debt has been sort of higher rates for quite a long while, whereas the interest income has always been sort of very, very low, with rates not being at parity. But now they can get sort of, I would presume, decent money on that cash, then yeah, essentially they're at sort of net interest, basically. The income is sort of pretty much equaling the cash equaling the interest expense, and it should only get better. This does actually seem to be the case with Volkswagen as well. Just coming down to their interest income, they've actually got 2.5 billion euros in interest income, even though sort of they do have an enormous amount of debt, of course, but it's largely fixed. They've got sort of 3 or 4 billion expiring this year, out of 180 billion, or no, where are we? Yeah, 178 billion. So yeah, crazy really. A lot of it is sort of perpetuals at the same rate and just continues indefinitely, or it's sort of 10-year fixed, 5-year fixed, and I'd sort of expect rates to be back down to sort of a lower level. Certainly within that time, within a couple of years probably. So yeah, it's I'm just sort of reading the news as well. Deliveries have been sort of quite good so far in the first half of the year, up in every region except China. China sort of, this is comparison of last year's results really, sort of would have struggled to sort of grow figures since then, although would hope China would be sort of doing a little bit better, but they seem to be going with their own brands. But America doing quite well. EVs up in America, and sort of normal cars up in America as well, and still dominant in Europe. So yeah, maybe I'll just hold on for now. If something sort of takes my fancy, then it could be gone, but yeah, not looking to sort of switch just yet. Broadcom, I think, is an interesting one, and sort of maybe a case study on anchoring. So the last sort of few months, really, it's rocketed up due to the AI hype and sort of chips and semiconductors going into that industry. Broadcom do some in that space, but not sort of a huge amount. And they've seen a tremendous rise up from sort of the low to mid $600 range to $888, where we currently are. But the analysts seem to be saying the profit is there to back it up, basically. They've been sort of increasing their earnings estimates for Broadcom, especially next year. They're up to $45 estimated earnings per share. So that puts them at sort of a forward for next year price to earnings under 20 still. So obviously the current PE has gone way above that, sort of 20, nearly 28, but forward PE still under 20. So it's not quite like the Nvidias and AMDs where PEs are through the roof, with sort of not quite enough to back it up, basically. Although I notice Nvidia, they're just sort of all over the place, doubling the earnings estimates and sort of dropping them again, upping them again, doubling them again. So yeah, basically they haven't got a clue. So I think partly what has been moving a lot of things up is the drop in the US dollar. Look at the dollar index here, sort of measured against a basket of other currencies, mainly sort of euro and the Japanese yen and the pound. You can see it sort of topped out at September, October time last year, and has sort of been coming down ever since. Sort of rested a little bit earlier in the year with the sort of banking crisis, and rose up a little, but has just sort of tumbled down on the recent news, inflation news and that sort of thing, which we'll come to. But yeah, this has been sort of pushing commodities up and sort of risk assets up in tandem, really. So yeah, interesting to sort of see where this goes, whether this is just US-centric news on sort of inflation and that sort of thing, or if it's de-dollarization from the rest of the world, you know, as sort of the narrative is at the moment. People like China and Saudi Arabia saying, why do we need to buy dollars to sell oil to each other? We could just do it in our own currencies. There's sort of a hell of a lot of talk of that, certainly between the BRICS nations, Brazil, Russia, India, China and South Africa. So yeah, the more they do that sort of thing, the less demand there is for the dollar. But I would imagine this could be sort of just partly due to the news over the last sort of couple of weeks. Certainly this spike downwards that's taken us below 100. Yeah, it's certainly moving things up. You can see copper sort of quite a bit on the up. It was in the sort of mid 370s range for a few weeks, and has now rocketed up to 391. So that's pretty good for the mining stocks. Never did get into KGHM, the one that I was looking at on Interactive Brokers. That sort of rocketed up with copper and silver sort of going up recently. So yeah, I'll keep an eye on that, but yeah, not looking to get in just yet. And iron ore sort of had a similar but not quite as drastic move. Sort of again bottomed out in May time at sort of 100, and it's now come up to 112. So good, but yeah, not quite as good as copper in the last sort of couple of weeks. As I say, silver been doing sort of really well, sort of over the last couple of weeks, up from $23 to just on 25. Did get to 25, I believe, on sort of intraday pricing, and yeah, not quite as drastic a move as it could be, but this is silver. We know it's sort of somewhat manipulated, so yeah, at some point it'll be allowed to go, and yeah, hopefully I'll have enough in my miners and options on miners when that comes. So we'll see what happens. So just taking a look at the news, we had UK employment data come out, and it sort of all looks rather bad. We had sort of our equivalent of the non-farm payrolls data. They sort of do this 3 month on 3 month rather than monthly, and this is May data, so it's a little bit behind. They had the June claimant count, which is up quite a bit, was expected to be down, and the unemployment change was worse than expected and a lot worse than last time. Unemployment also was expected to stay at 3.8% and ticked up to 4%. So pretty bad all round for the UK. It sort of seems to be spelling potential recession, but we don't know if it's for certain just yet. And then you had the US great big news. The CPI figures come out for June. Core CPI down from last month and below expectations, 0.2% for the core month on month. So that's very low. Brought the annual down to 4.8%. So they're getting towards their target. 0.2% sort of annualized is basically what they want. Sort of 3%. The ordinary CPI was also 0.2%, was expected to be 0.3%, and this pushes the annual down actually from last month 4% down to 3%. So it's a whole 1% off the headline number. So that's seen as quite disinflationary, it seems, by everyone, and that's pushed up risk assets. So portfolio-wise for the week, you may notice a few changes. In here, it's really just Shell, basically. I sort of mentioned about them. I was holding them for a sort of long-term bet on them transitioning to renewable energy and sort of getting a PE expansion, which they now seem to be sort of somewhat backing away from and focusing on oil and gas, which I gather is profitable, and I can see why they're doing it, but yeah, pleasing the shareholders with dividends and buybacks and that sort of thing. I just think you end up sort of basically like a tobacco company, essentially, making a lot of money and returning that to shareholders, but continually dropping price to earnings ratio because people see it as a sort of dirty, non-ESG friendly business, where I think sort of spending the certainly maybe keep the dividend the same, but spending the buyback money on sort of expanding renewables quite a bit more would sort of do a hell of a lot more for shareholder returns than a bit of buybacks, because a few billion on buybacks in the grand scheme of things isn't going to make all that much difference, whereas saying that we've got sort of 5 gigawatts worth of renewables that the sort of market wasn't expecting, if you even pushed up the PE from sort of 5 to 6, that's going to make an enormous difference for the stock, far more than just what people see as profiteering and spending dirty sort of oil and gas money on buying back your own stock. So yeah, I decided to get rid of them and put the money in the ISA. I mean, to be honest, it was sort of a dividend and not really that much in the way of capital appreciation, since it sort of rocketed up to the $22, $23 range, $24 I think it was as well, sort of in the height of the oil market. But yeah, can I really see it going all that much from here? Not really. Oil and gas have both dropped quite dramatically since the peak, and the stock hasn't really gone with it, so not really sure it deserves to be trading where it is. So yeah, that's gone, and the money has gone into the ISA. Not too much else in the way of changes in here. A few sort of ups and downs. Hymax sort of having a reasonably good month, but he's down on the Friday. Basically everything down today. And then the ISA, so I put the shell money in here and sold off my 1 to 3 year bonds, which I've been sort of wanting to get away from for a while, because it is more of a bet on the interest rate, which I was really just looking for a bit of short-term income in the ISA, and that certainly wasn't giving me it. So I bought the Lixor Smart Overnight Bond. Sort of trades similar to a money market fund, basically. It's sort of lending money to businesses overnight, and you sort of get a very, very small amount of interest, and they just keep rolling that into the fund. It's an accumulation fund. You don't get dividends from it. Just the fund gets bigger. So, guessing hence why it's over £1,000 share price. So yeah, I bought a bit of that, or that's now my biggest holding, being sort of quite a bit of cash from the shell money and my bonds, and I had a little bit of cash in here anyway. Just can't really see anything that was taking my fancy to buy. Sort of obviously bought quite a lot of gold and silver miners recently. Hadn't really seen anything that I really wanted to average up on, basically, because they've been going up recently, and I didn't really want to be putting more into REITs at the moment, even though some do look cheap. Oh, and we've had a fairly nice recovery on Sylvania Platinum, which was sort of quite down. I actually went into the red, even including dividends paid, but that has recovered sort of quite swiftly. Got down to sort of 65p, and it's now 76p. So yeah, I'm back to just slightly red, but well in the green, including dividends. So yeah, that's an interesting one. It's the actual metals haven't recovered quite as much as the stock has, so whether they're seeing something we're not, who knows. And then Cleanspark, as I say, the Cleanspark has provided the majority of the gains. It's now 160% green in the IG ISA. Everything else sort of struggling a little. Pan American doing okay, but yeah, obviously down on the longer term, waiting for silver. And yeah, Chinese tech sort of recovering a reasonable amount. And the options have gone up a little bit in value, and bought a little bit more Himax. So yeah, pushing for the options. I may be depositing another £1,000 at some point to buy some more options, but they have sort of gone up a little bit, and trying not to sort of anchor myself to the price that I paid and look at it as if it's still a good option, a good bet basically for the next year and a half. So yeah, that's the portfolio for the week. As I say, very strong week, sort of nearly 7% up. So we'll see. Let me know how you guys are doing, if you're buying anything at the moment. I'm sort of struggling to see anything to buy, but yeah, like and subscribe, and see you soon.